straight off to Rajan Malik, Head of Equities Private Client Group with MF Global. Rajan, morning. Thank you for joining us. Let's start with Coal India, FSA, and what it means for the outlook for PSU stocks.
Good morning, Nikunj. I'm afraid I dare say that this is not a very good sign that the government should come and tell how to run a company. After all, it's a listed company. However, they might have their compulsions, but going forward, that's why people are very scared of investing in PSUs. Because if that's the view the government takes, well, then there's no point privatizing some of these companies.
What about the other side of the equation, which is private power companies will now get assured fuel supply, and it's time to revisit names like Adani Power, JSW Energy, and India Bull Power?
Sure, Nikunj, one man's meat is another man's poison. I would agree that there will always be a positive side, but I think if the government wants to subsidize or do something like that, the company which is being victimized needs to be compensated adequately. You've seen what's happened with the oil PSUs. We can understand why the government is very hesitant in bringing about price increases like the ones warranted by the current ruling price. But then these companies need to be adequately compensated for the kind of losses that they are incurring. If the government wants to subsidize, nobody can stop them from subsidizing, but there's no point subsidizing at the cost of investors.
Rajan, if you feel that markets are a bit worried about policy action in oil PSUs, why are stocks like HPCL and BPCL marching towards a new lifetime high? HPCL is less than 100 rupees away from its all-time high, and BPCL is now less than 40 rupees away from an all-time high.
Nikunj, that's really something that I cannot answer. I guess it's just the anticipation that something would come on board. The anticipation came in prior to the budget. People thought maybe there would be some clarity. And I guess it's just anticipation that's keeping them afloat. Otherwise, there's absolutely no fundamental reason. I think when we studied accounts, there was something like a going concern concept. And I don't really understand what the going concern concept really means in terms of these institutions. There may be value, but that value is not going to come to the fore until oil price falls or the areas go belly up.
Rajan, how confident are you about BHEL now targeting, 15,000 to about 16,000 megawatt orders in FY13 and the management commentary which was so bullish for the quarters ahead?
You see, we would continue to be optimistic, but the kind of orders that are flowing through, one really needs a pickup in domestic investment, and that needs investor confidence coming back into play. And that doesn't seem to be happening as of now. You have the RBI policy where everybody expects the RBI to cut rates, and maybe that will change things, but it's too premature to really bank on anything like that.
So Rajan, after a 14% appreciation in this calendar year, where are the best places or best opportunities in this market to put money to work?
Nikunj, we are of the opinion that the market upside may be capped, and you have downside risks in terms of policy inaction and global headwinds. In that, we would recommend people to move back at the upper end of the band, to move back into defensives, and maybe at the lower end of the band, get into the high beta plays, including real estate at the lower end of the band and infrastructure names. But at the upper end, domestic consumption stories need to be the ones to focus on.
Rajan, with the exception of Tata Motors, almost all the other stocks are looking slightly toppy. Are you of the view that the springtime for autos is actually over?
Nikunj, let's look at it from the angle that everybody anticipated diesel car prices to be raised. Now, that doesn't seem to have come about, but that might have resulted in most of the people who wanted to buy cars having gone out and already bought them prior to the budget. Now, our belief is even seasonally adjusted, April normally one expects it to be a slightly weaker month. Even seasonally adjusted, April and May figures might turn out to be slightly weaker than anticipated. So in that sense, we do expect some disappointment going forward, and we would wait to buy into some of these counters. Technically, I believe Hero MotoCorp would look the best if one gets prices around 1950, 1970 for a possible bounce back to about 2150, 2200.
Rajan, as of now, liquidity has surprised us on the upside. Do you think this time around earnings also could surprise us on the upside?
I would be very surprised to see a very major change in anticipated earnings. You could have pockets of strength, but if you're expecting a very major departure from what Sensex earnings for financial year 12 or 13, it would be too premature to say that. So one would have to wait. Last time round, there were a lot of tailwinds in terms of currency movements that one saw, especially for the technology sector. But it does not appear that there are going to be very many tailwinds this time round. So maybe around 1200 to 1225 for financial year 13 would be the Sensex earnings as per our estimate. And we don't see very major surprise to that happening.
What about aviation stocks, Rajan? Do you think at these levels the risk-reward ratio is in favor of buying aviation stocks? The bad news is well in the price. The entire Indian aviation sector is now available at a market capitalization of less than $2 billion.
Once again, Nikunj, that's really a sector where one would want to avoid. The policy announcements have got some of these shares in focus, and probably Jet Airways and all have got excited on basis of some. But primarily, I don't think this is a sector where one would want to enter unless until you buy for momentum on absolute dips. Principally and fundamentally, it would be an avoid.
So what could be the near-term catalyst for Indian markets? Credit policy or the annual guidance from Infosys Technologies?
Infosys guidance would basically mean something for the tech sector. But I think it's policy action that requires to be looked into. And once you do get that, that will change investor and market corporate sentiment. And once you start seeing investments back in the corporate sector, then you can possibly see an upside to what the earnings potential is likely to be. Its growth is going to be based on basic investments, and those investments will not come about unless and until there's a change in sentiment. Maybe interest rates will factor in, but I guess interest rate cuts also, the anticipation has been pared down from the 150 basis points for financial year 13 to about 100 basis points now.
Rajan, why exactly are consumer stocks outperforming? Consumer stocks normally they tend to outperform when global market conditions are choppy, when liquidity is tight, but right now there is abundant liquidity, global growth is back, US economic recovery has surprised us on the upside, and Greece problems or the Greek problems are now behind us.
Because most of these stocks underperformed when you went all the way up to 5,600. It's that interest has come back in these stocks on the way down from 5,600 to 5,200. And we would continue, like I'm telling you, we are of the opinion that the market upsides are capped. People will continue to play the domestic demand story. Now, if that's what India offers, that's the core strength. So that's why the interest comes in over here. Despite the fact that they enjoy premium valuations, there may be still upsides in some of these stocks.
So if you have to construct a portfolio which could give a 25% return in next 12 months, how much of that portfolio, how much percentage of that portfolio you would allocate to consumer names?
At this point in time, maybe 30 to 40%. But if the market were to go down, then I would have to shift and get into some high beta stocks. And it's not just names like this. There are a whole lot of stocks. Let me give you a stock, for example. We continue to like a stock by the name of Jubilant Life Sciences. Now, I must add over here that we have recommended this stock to all our clients, and a lot of them might be owning this stock. Now, we believe that this stock has underperformed because of some currency fluctuations. They have some foreign currency loans, and the bottom line gets restricted on the basis of mark to market. But we believe that given the core performance, there's a 25 to 30% return in this stock over the next 3 to 6 months. So based on how these stocks perform, we continue to go overweight and underweight. Maybe on the way down, we might get into some banking names and infra names. But on the way up, at the upper end of the band, we continue to like stocks like Jubilant and maybe even Hindustan Lever and ITC, so that we remain defensive on and the portfolios don't take a very major hit if the market were to fall.
Rajan, do you like Cairn as a story?
Yes, Aisha, we like Cairn as a story once all the regulatory framework is in place and its change of management takes over smoothly. We do like Cairn as a story, and we do believe that there is upside, and we would any day prefer it to the likes of an ONGC.
I might sound slightly repetitive with this one, but is it time to buy a India Bull Power, a JSW Energy, something like Adani Power, companies where operating capacity is already on, but they lack fuel supply, and after the FSA agreement, they pretty much will be able to fire full cylinders?
No, Nikunj, I don't think. These stocks have already been excited for the last 3 or 4 days. And you see in most of these kind of stocks, the excitement lasts only for about a week and then fundamentals start playing their part. You may be right, but you really don't know how things will pan out and what kind of legal actions take place and what happens thereafter. So one would avoid unless and until there's further clarity. These stocks have been beaten down so much that you might want to enter at maybe marginally higher levels than enter today.